Hi all, Joshua Steger here from etfadvisor.com.au, and today I'll do my usual weekly rundown of the Aussie ETF market and what investors should be looking at for the week ahead. I'm going to cover three things this week. Number one, I'm going to look at China and just some key levels that I saw this week and why I'm still very interested in China and Asia. Number two, I'm going to look at resources and just make a note of how much they've run in quite a short amount of time. So they might just be a little bit extended here, but I'll show you a couple charts and give you my ideas on that space. And number three, I know we've been talking about a US correction, and thus far it's been averted, and the market actually looks relatively good there at the moment. But I'll just talk about some key levels that I'm watching in the US, and if these start to break and falter, we certainly need to change tact really quickly. So I'll cover off on that as well. So just summary: number one, China; number two, resources; and number three, some key levels in the US. So let's get started. The weekly emails already gone out to subscribers, and we'll just touch base on a couple of the ideas that we had last week. So our key ideas last week were, I'll just get the pointer. So wire, earth, food, and Asia, and to add to the Asia exposure. And then we had a couple of sectors worth watching for improvements. So obviously we've got the US, oh sorry, not the US, the nuclear space. We've got Japan, South Korea, and Bitcoin as well. Obviously, I'm still a little bit concerned with the market in general and whether I think it's a matter of when, not if, for a correction in the US. So things are very extended, and we have to keep that in mind. But just in terms of the ideas last week, wire into new one-year highs. In terms of the other ones, Earth still setting up. Food actually got into two-year highs, but still setting up and feels like it needs a little bit more time. And then Asia, I'll cover that a bit more in the next section, but still looking very good and very constructive. So they're the ideas last week. We've got a few more good ideas this week, and yeah, I'm still very, very optimistic about the ETF market and the opportunities available going forward. So number one, as I said, I want to cover off on China. So I was watching this week, and obviously it's been really strong. So it's been a really key space for us, and you can see. So this was China when they announced stimulus, and if we even zoom right back out to the monthly, you can see just how far down it had got, and just in no man's land. That's pretty much, yeah, since COVID. It's just been a market that's done nothing. Obviously, China had a few issues with their economy and whatnot, but finally the government came in with a stimulus package and showing, a bit of a change there. They're going to support the market, and that's where we got that initial move. And then it's just kind of that was in October, late September, October last year. And so it's coming up to a year where it just kind of didn't do anything, was in this long base, and in the last couple of weeks it started to push out on good volume as well. So, we'd been watching that. It's really quite constructive. It's moved out. We've had, a few key ETF ideas that we outlined to subscribers. One of them was CNU, which has been really good, and then obviously Dragon as well. But what I was watching this week is it did sell off, but the volume was quite low and quickly got supported there at the 10-day moving average. That's a light blue line, which is a really good sign. So I'm really keen to watch what happens this week, but that's really positive that it held a 10-day and pushed up almost back into highs. So you expect, from a move like that, you expect some selling, but yeah, the support came in really quickly. So that's what I'll be watching in the week ahead. Same kind of thing happened in Hong Kong as well. So this had been the stronger market, but you could see there's still pretty much a seller up here. So if we have a look on the weekly chart as well, or actually if we zoom that out, I've been saying the last few weeks this is really a super constructive setup just for a broad market index. We might even actually have to go to a monthly. So there you have, yeah, I mean, that's a really solid base. Obviously, you've got some overhead here, but just in terms of setup, and then it's just kind of been, you've got 1, 2, 3, 4, 5 months of green bars and yeah, positive moves to the market. So that's a really nice base there on the weekly. It's just a matter of it trying to build the energy to make that next move. And so you can see here on the daily chart that, yeah, clearly there's been a seller here, came up to there, seller again, seller again. But what's interesting is they found support at 50-day moving average. It's at the 50-day again, but it's kind of making, you can kind of see these higher lows, and that's a really positive sign, and things are trending higher. So that was a brutal couple of days, find support at the 50-day. And then the really positive thing was finally Alibaba reported, and it was after market for Hong Kong, so that's not reflected in the Hong Kong price yet. But this is the Alibaba that's listed in the US, and you can see it popped about 13% on really good volume. So it's coming out of that kind of constructive pattern. It kind of been a bit of no man's land. We're certainly waiting for those earnings. 13%, that's a pretty solid move for a very large company. And I mean, there was talk about them starting to do some AI chips and kind of taking on NVIDIA. And you've got to remember as well that these Chinese companies have big AI investments as well. So that's why Tencent also has been creeping higher and is very much in trend. So there's your kind of support levels. There's at the 20-day, 10-day, buying at the 10-day, and it's in trend at the moment. So really good place to be. Very big company, not at all-time highs yet, surprisingly. So there's still all-time highs look to be about a bit over 100, and it's about 77 at the moment. So pretty strong trend though at the moment, just as on the weekly, and you can see it's definitely making a move, and so that's a solid step change. Now we had Baba reporting. Asia's obviously been one of our key ways to play that space as well. So beta shares, Asia Technology Tigers, and expect that. So this is the Baba results not factored into this here, and kind of expect that to move into highs, and then we'll just see. There's a lot of other companies actually reporting in Hong Kong as well, so it's reporting season there, and this could result in a good move out. So pretty positive things at the moment. So just touching on the other key winners in China as well. So CNU had been one of our key ideas, and that really led the Chinese market out, and you can just see how strong that's been. I mean, if we get the measure out, so like from the 20th of June to now, there's 23%. I mean, that's a really strong trend, and it feels like it's just getting started as well. So really strong there, and then obviously we had Dragon as well, which we're pretty happy to also have in the model portfolio, and expect that to push out as well this week. And with Baba, you might start to get that follow-on buying and that trending that we've seen in Tencent. And as I said, there's a lot of other companies in Hong Kong reporting. So things are certainly starting to look up for these Chinese tech companies. And as I said a number of times, they've been undervalued. So I'm still very keen to be overweight China and Asia tech. Particularly in the model portfolio as well, which we have for subscribers just as part of that weekly subscription service. So number 2, I wanted to touch on resources. So the main ETF that we look at for resources is MVR, and you can see that's been in a really nice trend, and once again kind of finding support at those key levels. So now the problem is, maybe just draw this back onto a monthly chart, and you can see it's probably a little bit extended. You've had a good few weeks in terms of a move, and now it's coming up into this kind of resistance around that, say, 38 to 40 zone. So it might push a little bit higher, but it kind of expect it to do a bit of consolidation before the next move. But that's a really positive sign for resources, which had been a no man's land for so long, and in particular that's now reflected in the Aussie market and creating some like a more bullish market in terms of people wanting to take risk or happy to take risk. So here's the ISO, the iShares small ords, and you can see that's it's outperforming, like the small caps are and the mid caps are outperforming the Aussie ASX 200 at the moment. So it's been a long time since that happened, and this is one of the reasons resources are back on the agenda. So yeah, that's small caps, and just in terms of once again drawing that back to the monthly chart, we're probably, so you see we're not at all-time highs, and you're going to find some resistance up around that $6 level, maybe even $5.50 where it is now. So much like resources had a really strong move in a pretty short space of time, and usually now you're coming up against these points of resistance, you'll kind of get that chop zone where these ETFs or the indexes can start to build the energy for the next move, and but really positive signs. That's really on the back of resources. Some of the other key ideas that we've had as part of our weekly subscription were things like ACDC, and you can kind of see on the monthly chart as well, coming up into some resistance, really strong from the bottom. So it's a move straight up from the bottom. As I said, now you kind of expect it's a little bit extended in the short term. People will want to start taking profits. So it's moved from kind of 80 to 100, so like kind of 20% in a matter of 2 months. So it's a really big move for a big sector that had been unloved, and maybe there's people who bought here or here who want to now take some profits and get out and say, I'll never want to know about resources again, and then that's let them offload, and then it can go for its next move. But it certainly looks like it's trending. One of the key ideas last week was copper miners, and we just like that, finally wanting to move out of this kind of consolidation. Had a pretty good big week, and once again, this is on, I'll pull that back to the weekly, but you can kind of see it could pop up a little bit further, but it's going to have some resistance very close, very near, so to where it is now. So I'd fully expect it to get there, maybe September, October, doesn't do anything, and then later in the year, I think we can have a really good move again. So one of the ideas that we've got in the model portfolio is XMET, and quite like that critical mineral space. And you can see, because this was only listed in 2023, the resistance it got out of there, but you can see there it got out, then back tested, and then it's in those all-time highs. But now, once again, as that move from 10 to kind of 10, from 8 to 10.50, so it's kind of 20%. A lot of these resources move kind of 20% in 2 months or so. You kind of now need these moving averages to catch up, and things, a bit of back and fill, bit of consolidation before the next move. So fully expected resources a little bit extended in the short term. Maybe they can move a little bit higher, but they're all kind of up against that weekly resistance on many of the charts. So certainly looking for, I'm not turning bearish. I'm long term very bullish on resources, but I just think they're at a point where now moving into what's going to be typically a volatile period, September and October, a bit of back and fill, a bit of consolidation would be perfect, really healthy, and then that's going to set us up for the next move. And it's almost like Atom at the moment, so and that's kind of playing out. And this was just a huge mover and really fast from that kind of tariff low. And this is kind of uranium, but it's not just uranium miners. It's the whole kind of nuclear space, from miners through to constructing nuclear plants to operating them, and the equipment that goes into that and the maintenance and whatnot. So you can see here from the COVID lows, and it just shot up. So once you've seen something like that, and we've obviously covered that the last few weeks, things like Ethereum, if you see something make a big move, that certainly draws your eye to it, and something you should watch. And usually, momentum begets more momentum, and something that's trended and moved as quickly as that is worth watching for a secondary entry. And that's kind of where we've been with Atom for the last few weeks. It is extended, so this is why it's kind of chopping around, building energy. What we were looking at was that kind of downtrend pattern here, which it just popped out of this week, and then if I had a crystal ball, I'd probably still say it needs a bit more time and maybe something like that. So if you were looking at, in terms of a time period, you probably, it's going to line up with our view that September is going to be quite volatile. So it might be something like that. And then this would be a perfect point for it to go from. And then, it's kind of just worked off, people who wanted to get out on the weekly chart. Let's let these moving averages catch up. And then it's in a position where it's ready to go again. But we've taken an initial position last week, and we'll just see how that acts. I mean, it could just take off, at which point we certainly want to be on board, but it's also ready that it might take, next few weeks as well. And very happy to buy it here. When it starts to move into new highs, we definitely want to be on board because it's a key sector. I think, pretty much all the tech gurus are saying the only limitation to AI going forward is going to be energy. So uranium ETF atom is going to be a really, really important way to play that. So key idea, just a matter of how we build our position. But this is kind of, I think, what we'll see now in resources. Obviously, they're not as extended as this, but this is where you're going to get your chop zone as a kind of the energy. The sellers get out, buyers, probably aren't as keen to buy here, but after a little while and a bit of time and things, just start to tighten up in kind of that volatility contraction, they'll start to buy here, and then that's where you get your next move. So that's certainly what we're looking for there, and thinking, as I said, resources might just be at that point where they're going to do what Adam's doing now and just kind of be in that little chop zone before you get another setup. So just in terms of time frames, there's September. We're probably looking October, November. So, a nice couple of months here before the next move would be perfect and very healthy, and would make me even more optimistic on the chances of this continuing its move. And now, just in terms of time, we'll cover off on point 3, and that's some key levels that I'll be watching in the US. So really interesting charts in the US. We've got the S&P, and what's really, becoming evident in the S&P is that it is finding support. So on my chart, I've got the 6-day moving average, the 10-day moving average, and the 20-day moving average. Pretty much through this from the tariff lows, it's been supported at that 20-day moving average. So there was that initial sell-off in October, but straight back the next day above that 20-day moving average. 20-day moving average, it's above the 20-day moving average now. So that tells you something really key. If it does, in fact, break that 20-day moving average, so you're probably looking, it hasn't spent 2 days. There's 1 day under the 20-day moving average. There's 1 day on the 20-day moving average. So if it spends 2 days under the 20-day moving average, there's a big change of character, and will probably lead to me to that would just be another point of data to say that we're in a correction. And as I said, it's had a good run, and it just needs, much like what we were saying with resources as well. It just needs that bit of time, and a little correction here would be perfect just to shake out the weak holders. Just kind of get through that historically volatile period of September and October, and a bit of back and fill, and then I think we can have a good further continuation to the bull market. There's so many positive things happening in the market. Obviously, you've got rate cuts, but you just got these key themes like AI, robotics. Huge things happening. Let's have a quick look at the NASDAQ, and you can see this has been a bit different. It's actually weakening quite a lot more than the S&P at the moment. So this had been the leading index, and you can see there's held a 20-day, but then there's actually 2 days under the 20-day, and then got back up. There's 2 days under the 20-day, got back up, basically on the 50-day, and once again it's under the 20-day, near the 50-day. So we'll just see how that plays out. But then the key moving average we're watching is that 50-day. If it spends 2 days under the 50-day, once again, that's another data point that will lead me to think that we're starting a correction, because that's a big change of character compared to how it's acted from the tariff lows. And then the other key thing I'll be watching is small caps. The small caps are leading, probably the stronger market at the moment. Certainly not into all-time highs, but you can see on that announcement of expected rate cuts, you had that continuation, and it's just been creeping up. But sometimes the small caps go up and then boom, retest pretty quickly. And if that happens, so if that retests and then we get the S&P and the Nasdaq falling below their moving averages, and then I'll be looking at a few other things like IGV, which has been quite weak. This is in the US, iShares Expanded Tech Software ETF, and you can see that is actually under the 50. It's under the 50-day moving average and having upward, kind of having a ceiling at the 50-day moving average now. So it's actually found its high back in, actually late July was its high, and it's kind of actually been correcting since then. So tried to rally with the market here, but it's actually hit the 50-day moving average, which is now providing resistance, upper resistance for it, not support. So I'll be watching that really closely. That's another data point. If that starts to sell off, that's another indication that the correction that we know is just a matter of when, not if, in the US is underway. So there are a few key things that I'll be watching for subscribers, and we'll certainly be giving midweek updates if anything changes. But you can kind of see quite clearly that we're right on the cusp, and we need to be careful because there are extended names. So obviously resources in Australia are extended. All our, the broad market indexes are extended. The US market's extended. The only thing that looks not too bad at the moment, and where there's some real momentum, are things like China and Asia, which feel like they're just getting started. And once again, something like Alibaba's not extended like the rest of the markets. You can see, it not that long ago was just on the 50-day moving average, and it really hasn't done anything compared to the rest of the market. So it's only just starting its move here, and really that's what I've been concentrating on for subscribers the last few weeks. We're not chasing broader indexes. We're not chasing tech. And even though we like it, robotics and AI, I think they're all very extended. So what we have been buying the last few weeks are resources. Obviously, Asia we've been playing for a while, and definitely want to buy, these key tech markets and get into Nasdaq and AI and all that, but just not at the moment. I just think, moving into a historically volatile period, September, October, and we already got signs of weakening. Being quite careful. So I've got there's a few signposts for us to be watching out for in the coming weeks, and it wouldn't take much, just one or two bad days, and things could look totally different, and that's where we really need to change tact quite quickly. So I won't ramble on anymore. That's my update for this week. So once again, really quite excited about Asia, and still like resources, and they're in trend, they're extended, and then there's some key levels that we need to watch in the US. And as I said, it's not a matter of if, it's a matter of when they'll get a US correction. And at that point, that'll be quite healthy for the market, and I think it'll be a buying opportunity, and we'll certainly be ready for subscribers when that occurs.